Hello everyone, this is John Muntz with Dealer's Edge. I want to welcome you all to our ongoing series of workshop summaries where we take one of our full-length online workshops and produce a shortened video summary of the material provided. We typically host 3 to 4 full-length webinars a month that usually run about an hour's time. In case you haven't heard of us, Dealer's Edge is a firm dedicated to informing dealers and dealership management on topics relevant to your bottom line. We are always producing new content via our online workshops, webinars, manuals, books, and summary. For this summary, we are talking about keys to shrinking WIP, work in process, and unapplied labor with our good friend Rob Campbell of WIP. Dealer's Edge members have access to the full 1-hour workshop as well as the executive summary in PDF format, which is what is being read here, not to mention hundreds of other topics targeted to dealership owners and managers. Rob Keeley, an industry expert himself, wrote the summary, and the narration is done by Darius Jackson. All relevant links will be in the description below. Please remember to like, comment, and subscribe to stay informed of new releases. So, all that aside, let's get into it.
Dealer's Edge Executive Summary. Timeout. Strategies and tools to shrink WIP and unapplied labor. When it comes to financial statements and other reports, 2 items stand out as perennial problems for fixed ops managers: work in process and unapplied labor. While eliminating these profit drains may not be possible, it is possible to shrink them. Rod Campbell, analyst, and Joe Rowe, CPA Senior Manager for Witham, Smith & Brown Accountants and Consultants, joined us for an online workshop to share his tips on shrinking WIP and unapplied labor. After a long and successful career as a dealership consultant and trainer, Rob Campbell joined Witham, Smith & Brown Accountants and Consultants. WS&B is a full-service accounting and consulting firm, and as a dealer analyst, Rob uses his background to help his clients improve their operations through better planning and financial review. He has written extensively and has 17 books and manuals about fixed operations under his belt. He is a frequent and popular speaker at industry events, including 10 NADA conventions. This report is a summary of his comments and suggestions. There is no such thing as a free lunch. Anonymous. Unapplied labor means you either did not sell the technician's time, which of course is now no longer saleable, or the accounting is not tight and efficient. If you have larger than acceptable work in progress, WIP, or unapplied labor, UL, or those accounts are growing rather than shrinking, then this online workshop is for you. Rob Campbell shared his process for identifying the problems, finding the profit leaks, and then plugging them. Some of the takeaways are: how adjusted cost impacts your profitability and gross retention, the primary reasons for a growing WIP account, how to identify and understand the interaction of all the accounts involved and how they should function, how to get to the bottom of WIP problems and trace the source of errors, what systems are available to help minimize unapplied labor, how to make the right decisions on WIP write-offs, reductions, and other corrections, how to shrink WIP and unapplied labor problems and save the bottom line. Reducing unapplied time. When it comes to solving a problem, it is important to first understand where to look for the answers. And in the case of unapplied labor and work in progress problems, it starts by asking these questions. 1. Does payroll reflect invoicing? 2. Is labor billed to the proper expense? 3. Does the UL account really reflect unapplied labor, or is it used as a catch-all for something else? So what are the ways to cut WIP and UL at the shop level? It starts with basic controls. Shop-level controls. Hourly technician pay and guarantees are frequent contributors to UL when billed hours fail to match clocked hours. However, simply making everyone flat rate is not the cure-all. So what are some solutions? Get techs involved with billing/hours early. Often, the techs don't know that they are not on track to meet their production goals until it is too late in the pay cycle. Rob recommends sharing daily bookkeeping reports with the techs who will frequently spot errors and can be corrected in a timely manner. Guarantees are used to take the pressure off technicians when the shop traffic is insufficient to generate adequate sales opportunities, or a technician is burdened with jobs that are excessively time-consuming. However, guarantees can be abused. To limit abuse, some dealers employ diminishing guarantees that decline based upon their frequency of use. For example, The 40-hour guarantee is limited to 5 usages, at which time it drops to 35 and then to 30. There may be reasons for low production other than slothful or low-skilled hourly technicians. Some common time wasters are parts availability, locating cars, obtaining authorizations, etc. Consider using non-techs such as foremen, porters, or advisors for non-billable items like test drives, water leaks, noise vibration harshness, NVH, complaints, etc. Non-time payoffs, such as offsetting difficult jobs with highly profitable, easy work, are popular. If you have to overflag a tech, then do it through payroll and assign it to the internal policy account or adjust the rate. Speaking the same language. To avoid becoming lost in translation, it is important to understand some of the terms commonly used by service and accounting. Service side. WIP, or work in process, is the cost of parts and labor that you have expended on open repair orders. This example of a CDK ADP report, Command RWP, shows $2,820.90 of labor costs and $11,134.45 in labor sales on open ROs for jobs that have not yet been completed or picked up by customers. To keep ahead of problems, Rob recommends that open ROs be examined at least once a week. Accounting side. Work in progress, WIP, or if you are a Chrysler dealer, labor in process, LIP, is an inventory asset account that reflects the amount of labor that the dealership has purchased in the form of wages, but not yet converted into a sale. The objective is to turn these working assets into receivables, and then those receivables into cash, and is everyone's job. So WIP is really two different things: the cost of open ROs and an inventory account. Transaction side. The first question that Rob asks when he is investigating WIP concerns is, when is labor/time paid to the technician? What are the exceptions? When is time assigned? If time is paid only when the job is complete and invoiced, should there be any labor cost on the open RO report? Generally not. In fact, there might even be a credit until payday. But most stores don't pay when the full job is invoiced, and that creates work in progress, as techs are paid for parts of the job, such LOF, rotate coolant flush, or for large jobs that span more than one pay period, but not others, such as warranty special order parts, for which ROs open until they are received and installed. This happens more often on systems that split ROs, like Reynolds, and to a lesser extent CDK. So how does the money flow when a technician is paid, and what accounting journals hit WIP? Rob offers this graphic. Payroll journal. When a technician is paid, for example, flagged, booked, or assigned, in the payroll journal, it would debit the amount paid in the WIP and credit the amount in cash, because we bought increased an inventory asset, the technician's time, and decreased an asset, cash. For those who may not be accounting majors, a debit increases an asset or expense account, and a credit decreases an asset or expense account. Sales journal. When the labor is sold, it would debit reduce the cost of sale and credit increase the WIP. General journal. This would be used only if there was an accrual. The problem? There is a big leak in the gross profit barrel called unapplied time/labor. When investigating this leak, it starts with understanding how much techs are paid for billed work and how much is unapplied. If you are a typical store, service manager runs a booked time report weekly, maybe even daily, and makes sure flags match the report. The week's flagged/booked time reports are gathered and turned into the office for payroll. Since techs are not shy about saying something when they are short paid, we know they'll watch their checks. So there are two possibilities for unapplied time. 1. RO is still open with some booked time. 2. RO is closed, not paid, so not posted to accounting, such as those waiting for customers to pay for their repairs. Rob uses this Excel payroll spreadsheet, which is offered free upon request, to address issues of WIP ending up in unapplied time. The objective is to identify exactly how much of the technician's pay went to production, training, sick pay, etc., and how much was unapplied, so it can be accurately accounted for. In this example, The WIP shows cost of labor at $2,820.90, but the labor in process inventory account on the statement shows $14,472. How is that possible? Where did the $11,651 go to? It went to unapplied labor. That's where. Since the $11,651 becomes unapplied labor, it is a direct hit to gross profit. Looked at another way, because it is an inventory that was never sold, it represents $27,186 in lost gross profit. To address this, start by looking at the accounts. Understand your dealership's practices. When is labor paid? How are transactions posted? How is the payroll posted? What are the specific procedures in the dealership? Do a walkthrough of the transaction. Follow the booking of the ticket and how time and costs were assigned. Follow the payroll entry. So in this CDK example, we begin by looking at the sale accounts. Notice the three account types: the sale accounts, service, internal, and warranty, the general, and the payroll. In this Reynolds ERA example, we find the same three journals. Source 30 is the payroll journal. Source 3 is the RO sales journal. Source 11 is the general journal. Okay, so we have not closed this month yet, and all we see with the Source 11 general journal is the reversal of last month's accrual of $21,538. When it comes to accruals, in this case, $21,538 is reversed from last month. Rob recommends checking the prior month, August, to make sure that they match. Wait, last month the debit was $35,000. They don't match. What is going on here? Where did the $13,766 go? Depending on the answer, we might need to go into the detail of the journal transactions. So how do we solve WIP problems? This graphic describes Rob's methodology. Gather your source information. Compare it to what is actually happening. Correct what you find. Rob offers the top 5 reasons for WIP unapplied labor problems. Number 1 problem: tech was paid more than was billed. Possible causes: purposely overpaid for the job, by management, by advisor/booker. If the decision is to pay more than was billed, Rob recommends opening a second line and billing the excess payment to an account such as policy, training, etc. Was mistakenly overpaid. For example, 0.5 gets entered as 5.0. Someone is cheating the system. This is more prevalent with manual systems. Number 2 problem: costs are incorrect or do not take into consideration variations in pay rates. Possible causes: tech is given a raise and changed in payroll, but not in invoicing. Get the payroll and compare. This will require payroll/rate security access. Tech has a productivity bonus or override on hours. For an override, you can build the system to properly relieve the rates. For example, an apprentice tech at $13 FRH is assigned to the master technician who gets a 75% override on time billed. Rob recommends that the apprentice pay rate be set at $13.75. Rob cautions against cost averaging hourly technicians because it distorts their actual cost of labor. He recommends putting their unrelieved cost into unapplied labor and to minimize your exposure by critically evaluating how they are used. Number 3 problem: tech is paid for shop time that is never billed. Possible causes: if you're paying time, it should be billed to someone. Open an internal labor line/RO and expense the time to the appropriate account, such as maintenance, policy, etc. Number 4 problem: how to handle salary/hourly guarantees. Possible solutions: salary guarantees are paid. Payroll goes in at 40 hours, but only assigned costs come out. Balance goes against unapplied time. Hourly people are placed in WIP, assigned to proper account or unapplied time. Number 5 problem: what are some of the accounting mistakes that can happen? Possible causes: posting errors, vacations, training, other time off. Non-productive people being put in there. Remember, WIP is a sellable inventory. accruals are not properly handled. When asked why WIP or unapplied labor might be handled as accruals, Rob noted that some manufacturers require it. Rob recommends making it a habit to regularly check the payroll master summary for techs for errors. If WIP gets out of hand, it is possible to set WIP up as a schedule that displays labor time, etc., when it is purchased and then relieves it when it is sold. In this example, RO number 199808 shows labor charges of $36 plus $4 underscore $70 in journal number 45. Tech pay, which totals $110. It shows that the payment was received for $110 in journal 34, internal. In example 2, $350 is charged to journal 45, tech pay, and $378 was paid in journal 30, CP. Since it leaves a difference of $28 hanging out in journal 45, it should be investigated. Conclusion: misapplied work in progress and unapplied time can quickly kill gross profit. Tight controls and regular accounting are critical for understanding and controlling them.
Okay, that's going to do it. Again, this was just a summary of the material provided. The full workshop goes into much more detail. Please check out Rob Campbell at witham.com. Our writer Rob Keeley's information can be found at fixedopsolutions360.com. And to looking to becoming a Dealer's Edge member, it's dealersedge.com/VIP. All links are in the description. Please don't forget to subscribe as we have many more summaries on the way. This is John Mutz with Dealer's Edge saying goodbye for now.